Welcome back to another Tech Talk from MarketEdge.com, your source for unbiased technical stock research on over 5,000 stocks and ETFs. My name's Rachel, and with me today is David Blake, CMT, here to discuss what happened last week in the market and what we should look for as we continue through this week. David, how are you doing today?
I'm doing well, thank you.
Fabulous. Let's jump right in.
All right, well, it was a very volatile week last week, which we've been having quite a bit lately here. A lot of it is around two things, the Middle East conflict and then also semiconductors. And last week, we started out with a pretty good upswing. We had investors absorb some bombings over the weekend, but we started out with a nice rebound in the tech shares. And that was basically because semiconductors were outperforming. And that was led by a 6.6% spike in advanced micro devices. And after Goldman raised its price target, and then Broadcom also jumped on expanding its chip making agreement with Apple. Now, you're going to hear me talk a lot about semiconductors here today because it almost seems like daily you have a whole index here swinging up 5-6%, down 4%, 5%. And it's almost the way that the semis go that session is how the market's going to end up. And hopefully we can break away from that a little bit. But today was another example of the regular market kind of followed the conductors lower. But anyway, going back to last week, we started out after that big rally on Monday. Samsung came out, a Korean company, and they had great numbers, a little bit off on their guidance a little bit, and the stock fell like 15%. And that took the SOX, or the semiconductor index, down 4.65%. Everything was lower. And then you also had oil prices and yields nudge a little bit higher after Trump revoked the waivers allowing the sale of Iranian oil. So you have that going on in the background also, which is giving investors the jitters here a little bit. We went on a little bit during the week. Again, we had the FOMC meeting minutes, and they revealed a divided committee that was maybe a little bit more hawkish still than what the market wants to see. That caused some more sideways trading. And then again, there were some more new strikes on Iran by the U.S. on Thursday. But for some reason, investors kind of shook that one off, and we ended up moving a little bit higher. And then on Friday, we had another up day with 10 of the 11 sectors higher. So it was a broad-based rally on that day, and that was good to see. And in fact, to me, we've been talking about these triangle patterns in the Nasdaq and the S&P 500 about how they're going out to the right. And usually when that happens, you'll see the index break to the upside or the downside. And as Friday got here, I ended up saying that it looks like we're going to resolve this triangle pattern to the upside. We looked at a little bit of that last week on the charts. Maybe we'll look at it again here. But then we come in today and the semiconductors got smashed, and that was partially due to SK Hynix, another Korean memory chip company. It was down over 9% today on its second day of trading in the US. And that took the whole Korean market down. The Korean market was down, let me see, Korea was down about 12%. So, global markets today were kind of disappointed with this spike in oil. And then, of course, when oil goes up, yields go up. And we saw the 10-year and the 2-year basically almost trade up to an 18-month high. The 10-year today closed at 4.617, and the 2-year T-bill landed at 4.27. And that's about as high as they've been since February of 25. So it's going to be tough for the market to make much headway with yields rising. And then also with the oil rising on this back and forth fighting between the U.S. and Iran. The technical conditions of the market was mixed last week. We did have the Dow make a new high on Monday. It went above 53,000 for the first time ever. And then we had the NYSE and the equal weight S&P 500 also hit new records during the week. And on the flip side, we finally got the Nasdaq 100 and the SOX, who had fallen back below their 50-day moving average, finally make it back up above that key resistance and support level as the week was ending. And that also made me kind of think that I think we're going to resolve these patterns to the upside, and which is what you want to see. Now, they don't always break out to the upside and break out to the downside. And when you have a pattern like this triangle pattern that doesn't resolve itself, what normally is going to happen is the index or the stock or whatever will end up going sideways, and it'll end up being stuck in a trading range. And then you just have to wait. Instead of drawing the triangle, then you start drawing horizontal lines and wait till it finally breaks out from that. And apparently that's what we're going to do with these things, because today, those three indexes, the NAS 100 and semiconductor index, they all fell back below their 50-day moving average today. And that's a negative sign. In fact, I think the Nasdaq was down.
David, could you show this to us on a chart?
Yeah, I will. So then today, again, it looks like we're going to resolve it now down to the bottom. Let me show you here on the chart what we're referring to. Go on here and you draw a trend line coming down like this. And here you have your lines going here. And then we go here from the bottom and we're working our way up here like this. And this is your triangle pattern. Like I say, here's Friday. We can hear this is the Nasdaq, and the Nasdaq 100 was even more precise than this. And you can see it looks like, okay, we're going to finally resolve this triangle pattern, to the upside. And we've got some great earnings coming in this week. The banks report tomorrow. We're looking for 15 to 20% revenue growth, and the banks are expected to have one of their best quarters ever, with big trading revenues included in that. But now today, it wasn't really a breakout. It would have had to go up a little bit higher. But it was what some people would almost call it a false breakout, because you went up there, stepped across the line, and now you're back below it again. So we don't want to see that. We don't want to see it break this bottom trend line here over the next day or two. We'll have to see what happens with that. But again, if we don't break out of that, at some point, you start getting into a trading range, and it'll just go off sideways like this until it breaks one way or the other. And we'll have to see how this plays out. If it wasn't for the conflict in the Middle East, I think we would definitely break out to the upside, because earnings are expected to be up about 26% for the year, which is fantastic. And then you have the economy seems to be going along. And without this Middle East conflict stuff, I think we would have a nice breakout to the top, but we're going to see what's going on. Another thing that I have that we can look at in here, and this is RSP. This is the equal weight S&P 500 that we talk about occasionally. As you can see here, it's in this nice steady uptrend. It doesn't have a triangle pattern going. It's just following this 21-day moving average. It's just stepping up higher. And today, I think it was actually flat after being up, and it was following the Dow higher. Where if you look at the SPY, which has overweighted tech stocks in it, you can see it peaked almost let's see, almost a month and a half or so ago, and we're having trouble getting back up to those new highs. And this thing here, you can also draw in a bit of a trend line. See over here again, because you can see on Friday, it looks like it's going to resolve itself up to the upside. And what do? We turned around today and we went down again. Not really a false breakout, but it's close, because this was even more of a breakout than what the Nasdaq was. So we're going to have to see how this plays out. Again, this is because of the big techs and the semiconductor indexes. It's just holding it back a little bit. Today, you even had some trouble with the AI trades today. You had a lot more people talking about that the AI companies, well, when are they going to start making money? How much are they going to spend before they start seeing the money coming in from the trade? So we're kind of watching that stuff. Tomorrow, we have 5 of the top 6 money center banks reporting earnings. We have JP Morgan, which is trading at a new high. We have Wells Fargo, Bank of America, Citigroup, and Goldman Sachs. Again, they're going to have great earnings. But as I wrote in tonight's daily comment, even if they have great earnings tomorrow, I mean, they may pop up because it's going to open up. They're going to release before the market. But if we have some kind of bombs dropping and yields stick up even higher and oil prices go up even higher, are these stocks going to be able to run with that going on in the background? Now, you also have tomorrow morning a key inflation report, and that's going to be the CPI coming out. Before the market opens up, they'll have that out. You don't want to see a big spike in the CPI, especially on the core side with gas prices higher. But you have to remember, though, over the last month, gas prices have fallen pretty steadily until the last couple of days here. So maybe we get a surprise to the downside. Then we get the PPI on Wednesday. That's the producer price index. And we also have new Fed chair Kevin Warsh is going to testify before Congress this week, and we'll see how this is his first review here at Capitol Hill. We'll have to see if he offers up any surprises. Again, he was a little bit more hawkish than what the market was expecting on his first meeting and at the FOMC meeting minutes. But we have a lot of stuff going on this week, and I think that we could see this thing break to the upside or break to the downside. But again, it's going to be a very busy week with earnings and all this stuff. We'll see how yields react to the CPI and the PPI, and also if oil can stay somewhat contained, maybe below $80 probably will be welcomed by the market. If it starts pushing up around 85, I think you're going to see a little bit more problems for the market going further. So all I can offer out is I would expect to see some very choppy trading with this. And again, as the earnings come out, you may see some big spikes coming out in individual stocks. So if you see the spikes in oil or in yields, that's also going to throw a wrench into any kind of trend that we would see offering. So I wish I had better news for you, but I think there's just too much going on right now to call it. And the underlying breadth was almost flat last week. So that kind of kept me holding back from saying, we're definitely breaking to the upside, because the AD line, which we consider a leading indicator of market direction, was I think New York lost like 60 units and the Nasdaq lost like 100 units. So it's basically did nothing. And then the new highs and new lows was something we also kind of watched that. They were way down on the highs. 2 weeks ago on the Nasdaq, you had 745 new highs, but last week you only had 477. You did have 390 new lows on the Nasdaq, but then again, 2 weeks ago we had 648 new lows. So we're getting contraction on both the highs and lows. So you're not getting a hint with that. And even the New York, the NYSE, we saw contraction. A week ago, they had 338 new highs and 144 new lows. Last week, they only had 254 new highs, but 114 new lows. So again, you look for the positive and negative divergences in a lot of these indicators to give you a hint of what's going on underneath the stock prices. When you start to see some trends starting to move out and things, and we're just not quite seeing that. But I think with all that's going on this week, we're going to see this market probably break one way or the other.
All right, great. Thank you so much, David. And yeah, it sounds like a full calendar of a whole bunch of things that could go any direction. So we appreciate you keeping us up to date on all of this. Is there anything else our viewers need to keep in mind as they head through this next week?
No, I would say maybe tune into your daily comment. I'll try to touch base on if we see anything in the underlying breadth that is all of a sudden is making a change, that type of thing, or if we see more indexes begin to break below key moving averages or break above key moving averages, that could give us a hint as to how things may resolve going forward here.
All right, that's great. Thank you so much, David. And if you would like to get that daily comment that David mentioned, you can get it right here on the MarketEdge website. Go to marketedge.com and follow the steps that you see David taking on the screen. It's also included in your nightly email with all of your watch list updates and upgrades and downgrades after the close each trading day. So that's it for us today. Your first 2 weeks of MarketEdge analysis are free. Feel free to sign up by going to marketedge.com. If you enjoyed this, a like and subscribe help us a ton, and we'd really appreciate it. Until next week. All right, thanks, David.